When I was 23, I made a huge financial mistake. One that could have cost me over $900,000. When I was 23, I bought whole life insurance. At this time, I had no spouse, I had no kids, not even a pet that relied on me financially. Financially, I was solely responsible for only myself. Stay tuned because you're about to learn why me buying whole life insurance at 23 years old was a colossal mistake and how you can avoid it. Hey y'all, it's your investing coach Wahida here. Welcome back. This is where you can learn how to build wealth and invest even if you're the first in your family to do so. So, what is whole life insurance? It's a policy that pays out a sum. So it pays out a death benefit to your beneficiaries when you pass away. So the money, the death benefit, is guaranteed and it stays valid for as long as you keep paying your premiums. Sounds good, right? I mean, at first when I heard it, I was like, yeah, that sounds great. But there's a catch. Because there's a guaranteed death benefit, it makes the policy expensive. And we're going to see just how expensive it can really get. Life insurance is meant to provide financially for those who rely on you financially. If you have no dependents, you have no one relying on you financially. So you might not need life insurance, especially not whole life insurance. Have you ever been confused about life insurance? Let me know in the comments. There's a lot happening there, so I'm not surprised if you are confused or you have been confused. For me, whole life insurance at 23 years old with no dependents was definitely not what I needed. It was not what I needed by any means. Alright, let's rewind to when I was 23 years old, when I was just starting to learn about personal finance and investing. And when I say I was just starting to learn about it, I was just starting to hear about it, right? I didn't know very much or anything at all, but I knew it was important. I was just clueless on how to start. So, my brother introduced me to his financial advisor. Spoiler alert. This advisor was not interested in being my financial advisor, but he was interested in being the guy who sold me a whole life insurance policy. Yeah. And as a girl who works in wealth management, I get it. If he were to manage my money, he wouldn't get very much doing so. At the time, I had just graduated from college within the year, and I had less than $20,000 to my name. So, not very much, but we were debt-free. Fortunately, I didn't have to take out any student loans when I went to college. So one pro of being low income and smart, there's scholarships out there. So quick caveat, if your family is low income right now and you're graduating high school soon and you're looking to go to college, girl, apply for scholarships. Apply for need-based scholarships specifically. There's money for you out there, like I promise. But I do remember feeling very lost in high school when I was going through this process. So good thing for you, you found this channel when it's still small, where I can answer questions directly. So reach out if you have questions, like I mean it, like let me know if you have questions. I'll be happy to answer them. Now, back to this whole life insurance I had no business buying. This policy, that is the policy I bought back in 2015. So 9 years ago. These are the papers that were mailed to me 9 years ago. I must have felt some kind of way when I got those papers because I kept it for 9 freaking years. Because I barely had anything to my name, there was no incentive for this advisor to manage my money and invest for me. They wouldn't make any money off of me, but they would make a shit ton of money by selling me a life insurance policy. Typically, a life insurance agent receives anywhere from 30 to 90% of the first year's annual premiums. In my case, my premium was $1,800 annually, so that would have been a $500 to $1,600 commission, like straight to their pockets. I mean, that's a good chunk of change. So, I'm interested in investing. My brother takes me to his financial advisor for a meeting, And I go to this meeting all eager and ready to start investing. The advisor starts talking about different buckets, so different savings buckets, and emergency bucket, and investing bucket. And I was like, yeah, that sounds good. Like, even now, that sounds great. Yeah, you need those buckets, right? But then he brings up life insurance. And he's like, this is what we need to start with first. And I'm like, wait, what? Like, my first thought was, what the fuck is life insurance? But I don't say that because I don't want to sound stupid. And because at that point in my life, I thought it was my fault that I wasn't financially savvy. I was like, oh, our family grew up low income. My parents didn't know to teach me this information, which is true in a sense, right? Like, I right now have access to employer benefits and 401k matches that my parents never did. But at this particular point in my life, I was blaming myself. I was like, you need to put in work to learn this information because everyone else knows it. I thought everyone else who grew up middle income or higher knew this. I thought I was behind. Little did I know that most of us don't know this stuff. We weren't taught it in school. But all I knew at that time was that I had to start investing. I didn't know how or like what it really meant, but I told that advisor, like, I want to invest. And this advisor goes on about how I will be investing. He goes on about how life insurance has an investing component, well, the policy he's trying to sell me, and he's just going on about the different benefits of this policy. He's talking about how I can borrow against the policy if I ever needed cash, and he's talking about the different tax benefits there are. And he just kept saying words that I've never heard of before at that point. And he was acting like I was supposed to know what he was talking about. He was saying things like cash value and death benefit and dividend and tax deferred. It was all so confusing. And they were writing on that, right? As someone who works in wealth management now, they were 100% writing on the fact that I did not know what was being said to me, which meant I didn't know the right questions to ask. And they weren't going to break anything down more than they needed to, right? They just wanted to make that sale. But in my gut, it just didn't feel right after that first meeting. So I didn't sign on right away because they wanted me to, like, they had the papers ready for me to sign right then and there. But I decided not to make a decision that day. And me and my brother, we went home. And as soon as I got home, I did some Googling. And essentially I just searched, what is life insurance? But what I found made me even more confused. But what I found essentially was pro, life insurance has a guaranteed death benefit. Con, it's super expensive. So I was leaning towards not needing life insurance. I wanted to invest in the stock market, I just didn't know how. So fast forward a few weeks to the next meeting, and I told the advisor that I wanted to invest in the stock market. I didn't think I needed insurance. So they're like, okay. Well, there was a few more things that happened. I was like, maybe I'll do term life insurance and invest a difference because I saw that verbiage online and they're like, not great idea, blah, blah, blah. But eventually I thought we got to the point where I was like, I'm not buying life insurance. I just want to invest. And they were on board. So we signed some paperwork. And a month later, I got a hard copy of my policy in the mail. This exact policy in the mail. Yeah, kept it for 9 years. That's when I found out I signed up for life insurance, when I got that policy in the mail. I signed up for a whole life insurance policy with an $1,800 a year premium and a $180,000 death benefit. I swear to you guys, I thought I was signing papers to start investing, not buy life insurance. My brother, who was in all those meetings with me, he thought the same thing. We were both so confused. I don't even know what to say. Yeah, really thought we were just opening an account to start investing, not buy a whole ass life insurance policy. And that's how confusing these meetings can be. That's how confusing these reps can be. They throw so much jargon at you so you feel like you need their help. No. This step, like, you can start investing on your own And again, I think most of us, like 95% of us, don't have complicated enough money situations where you need a financial advisor to do the work. Y'all can do it yourself. And I think most of y'all don't even need a whole life insurance. So over the next 5 years, I talked to this advisor a few times, maybe 4 or 5 times. And each year when the annual premium came due in November, I would be like, maybe I don't need this policy, because $1,800 was due, right? So I'm like, $1,800 is a lot of money. So I would call up the advisor. I would say like, I think I want to cancel my policy, because at this point I'm paying $1,800 into a policy every year, but I haven't started investing anywhere else, right? So I'm like, what the heck? Because I didn't know of the other avenues to start investing. So I would call up this advisor when my annual premiums came due, and I was just like, I think I want to cancel the policy. But he would always convince me to keep it. He'd just start spouting the same convoluted benefits tied to the life insurance policy. The same stuff he was saying previously, of like the tax benefits and how there's flexibility on if you want to like borrow against the policy and that kind of stuff. So I was like, okay, fine. He seems to know what he's talking about. Let me keep it. That went on for about 5 years. So yeah, it took me 5 years of on and off research to finally understand that whole life insurance was not for me, not by any means. And I finally got the policy canceled. So again, what is whole life insurance? It's a policy that pays out a sum to your beneficiaries when you pass away, and it stays valid for as long as you keep paying your premiums. Sounds good, right? Yeah, it did. It sounded like a good deal to me. But here's the catch. It's expensive because of these guarantees. Life insurance is meant to provide financially for those who rely on you financially. If you have no dependents, you might not need it, especially not whole life insurance. So for me, this policy at 23 years old with no dependents was definitely not what I needed. And funny enough, I was talking to this guy that used to be a Northwestern Mutual employee, which is where I got my policy from. And he brought up a story about a 23-year-old couple. And he said that the advisor essentially presented them with a whole life insurance policy. And no, he wasn't talking about me, but it was essentially the same situation. Right? They were young, they had no dependents, both of them were just starting their careers, and the first thing offered to them by the advisor was a life insurance policy. The guy I was chatting with said he brought it up to the senior manager, saying he didn't think that this was exactly the policy or the product they needed at that time. Like, he was like saying there's other investing avenues that they should tackle first, right? But surprise, surprise, the senior management didn't want to hear any of that from him. They didn't care. That he eventually left the company, rightfully so. Let me know in the comments if anyone has ever tried to sell you life insurance and how that went. I've been approached to buy life insurance at least 5 times in my life, so I'm sure y'all have had some stories. What was the final straw that had me stand my ground and just cancel my policy? I finally surrendered my policy after running these exact numbers into like a compound interest calculator, like the one you see here from investor.gov. I realized that if I stayed in the policy, I could lose out on over $900,000 over the course of my lifetime. So that's a shit ton of money. That's generational wealth money. So I took a look at how much I was paying into the policy every year, and I was like, okay, how much would I have if instead of putting it into the policy, I invested that on my own? And I did the math for how much it would grow to until I was 81 years old. So in this policy, they have me paying the premiums up until 65, and then from 65 onward, the policy can pay for itself from the dividends. Doing that math, if I invested $1,800 every year until I was 65, and then just kept investing without adding extra money until I was 81 years old, I would have $1.4 million. From the insurance policy, if I were to pass away at 81 years old, they could potentially pay me out a death benefit of $485,000. So that's a $900,000 difference. That's a lot of money. This is generational wealth money, right? That's why we're not leaving it on the table, or in this case, the life insurance policy. All right, want me to walk you through those numbers again in a little bit more detail? Stay tuned for part 2. This is where I break down the calculator that I used and the numbers that I used even further, and we dive into the details of this policy and the lessons that I learned. Trust me, it's something everyone should understand. So be sure to come back and watch the second video, okay? So hit the like button, subscribe, and turn on your notifications so you don't miss the next video. And as always, please note that all these videos are not financial advice. It's really just for educational purposes only, for you to become a more confident investor. Thanks so much. Bye.